Yes. Hey, so you are supposed to indicate, that's what they are telling us, that the rounding up of the figures that you are going to write in the financial statements have to be understood. Okay? Or put a note at the end of the financial statements. That's what they are telling us. So again, we are supposed to talk about reporting period. Reporting period. Can anyone explain to us reporting period of the financial statements? How should it be? Reporting period? It can be annually. In fact, it's normally annually, because as we have already said that the balance sheet is at the end of the year. Okay? Yes. So that is what they are telling us, that reporting period, it is normal for entities to present financial statements annually, but basing on the International Accounting Standard number 1. So this is very important to us, that we have to indicate the period that we're doing the presentation of financial statements. Again, the reasons why a period other than 1 year is used, we have to state. Why have we written less than a year? Why is it so? So we're supposed to indicate that we have done this because of that. What can make us make a financial statement less than a year? Okay, company policy sometimes, some. No? You want to change the reporting period that you have, the management has said, no, we're changing, our year now is starting from October, not January. Okay, that's the reason. Again, change of accounting policy, as he's saying, that they have chosen to say, no, we're not going to use this policy, but you have already done part of it. Then you're supposed to report as at that. Okay, for you to exactly compare well when you are going after a devaluation. Okay, that's a good one. Thank you so much, Mona. The fact that the comparative figures given are not in fact comparable. Comparable. So what are we saying? We are saying that when we are reporting, we are supposed to report mainly, as we are already aware, that we report by comparing the figures. How years that we are using should be more than 1 year. So this is another thing that we have to note when we're talking about timelines of or time period of the financial statement. For practices purposes, some entities prefer to use a period which approximates to a year. For example, 52 weeks. And the International Accounting Standard allows this approach, as it is basing on the materiality. So this is what we're talking about. How about what is materiality? Materiality, what is it? Materiality, what is it? Materiality. Materiality, please. Do.
But I know it. Materiality, but I can't explain.
Mona? If you don't remember, you two girls, some, yes.
But Mark, there's a two way there. There's a Mark and reality. So let's explain what
It's one word, Sam. One word.
Materiality. Materiality. Material. Hey, Mona, you wanted to say? Come up. But we started talking about it. Dorothy, you've forgotten.
I've forgotten.
I
just
see.
remember.
Some.
Materials.
But I was thinking other things. So the way you said material, so I don't know.
As accountants, you're supposed to know materiality. Materiality, it's one way, it's one principle that an accountant has to know. Materiality is, of course, it will base on organization to organization. For example, if there are other things that the organization is not going to take it as very important, others very important. Even amount, sometimes they can think about it. Let's say, for example, us as our organization, all of us, we have our organization. How much should we say that when we have lost, this is a loss, and this should be recovered? How much can we think about? Let's just give that example. To say, when we have this amount, we'll just say it's a loss. Okay. But when we have this, we have to recover this money. Even yourself, if I ask you, where is your pen, Dorothy?
Yeah.
If you lose this pen, are you going to be concerned than losing your phone?
Oh.
Which is material between a phone and a pen? Thank you. That's what is materiality. You get the point? If you have a pen, as I've already given an example, you lose it, you're going to ask, Sam, Mona, have you seen my pen? No. I'll buy another one. It's immaterial. But when you use a phone, but at that time when I had my phone, my lecturer was there. She was moving and touched it. I think it is with her. Because it's something that is valuable. So when we're talking of materiality, we're thinking in those lines. To say, which do you value that it's very important? Okay. That's why we are saying about materiality, to say materiality is very, very important to us, because then we are going to know that this one is fine. Even organizations do the same. They will say that if an organization loses, let's say 50,000 below, it won't be concerned. It's going to be written in their books and laws. But if it's more than that, they're going to be no. Please press on Mrs. Packard. She has to recover that money. Okay? Even yourself, you can do the same. Your daughter or your sister has taken your money, let's say 1 million, and misused it. You can't be the same sum, we know. Very furious. You see, even people are going to get surprised. Is that the same sum that laughs every time? Because of the 1 million that your sister or brother has taken. While if he takes a 20,000, but please don't do that again next time. You have to give me back. I've forgiven you because you are my relation. You know it's 20,000. Okay. So it means to you, what is material is 1 million than 20,000. So this is exactly what we are talking about when we are talking about materiality. So timelines. timelines that the book specifies to us in connection of presentation of financial statements according to our topic in the course outline. If the publication of financial statement is delayed too long after the reporting period, their usefulness will be severely diminished. The standard states that the standard, meaning standard, international standard number 1, that is what they are saying. The standard states that entities should be able to produce their financial statements within 6 months of the end of the reporting period. Okay, so
What happens if, say, the organization hasn't been able to produce the financial statements, say, for 2 years?
this is what we are talking about, materiality. This, Dorothy, mind you, the same phone that somebody bought 2 years ago, the same phone Microsoft, and the same phone you should go and buy today, it's not going to have the same price, is it? Yeah. So that's why they're talking about materiality. Because if you come after 6 months, it means things are not going to have the same values. They're going to change. Okay? That's why it is advisable by the International Accounting Standard number 1 that we should always report within 6 months after the reporting period. Even when you are reporting at the office, is it the same? For example, in government, I used to work in government, they used to say, you're supposed to report within 15 days of the end of the month, if it's a monthly report. You get the point? So, you are supposed to gather yourself before 15th, the last day was 15th, you're supposed to report on what expenses or what collections you have done for that particular period of time. So this is what they're telling us, that the timelines also are very important to us, that we should specify that this is the reporting period. If you are going to report after that, it means values are not going to be the same. Things change. Today you go to shop, you are going to find the same price. Tomorrow may be the same. Maybe after a week you say, I remember, when was that? Listen to me. What was I buying? When I went to the shop, I said, no. Why is it like this? They said it has gone up. I came last month. They said, you're talking of last month. 3 days before today, people were buying at a cheaper price. So these are some of the cases. That's why we are supposed to stick to timelines of reporting. Some, is it clear? Some doesn't understand. Mother, do you understand? You are not here, son. I'm telling you. I'm a lecturer. I'm a teacher. I started knowing people sometime. I always say, Sam, you are not here. You're thinking too much. You're not here. You should not be disturbed with those girls. They're just cheating you. I'm telling you, they're cheating you. They say, Sam, you're not answering.
I don't know.
Why are you so confused?
I don't
No, you should not make money in class. You should make money outside.
I'm not a girl.
You're supposed to be in class. You know, when somebody is in class and when he's not, I know that this one is not in class. Dorothy, have you heard? Explain to some what we have said.
I will just give you an example that when we are remitting taxes at MRA, they say by 14th of every month you have to remit. So if you go beyond that, they charge you penalties. So it's the same as the financial statements. If the reporting period is the 1st December, by 15th, by June of the next year, we have to produce the statements, not later than that. Otherwise, they will not carry the same weight as they would if you had reported in time.
Always, us as accountants, we have to think that things change every day. I was giving an example, Sam, to say the same thing that I bought last month today is not the same price. Okay. Reports, you are a reporter, a financial reporter, and we're talking about the presentation of financial statements. You are supposed to do within the timelines that is stated to you to do it. For example, International Accounting Standard number 1 states that you're supposed to give in financial statements within 6 months after the end of the year, the financial year. Therefore, we are talking about what month? If our year ends in December, what month is the 6th month of final reporting for us? June. Okay? That's what they are telling us. You should report within the same period of time. Don't exceed. Why? In fact, she asked, I said, because materiality is what we're thinking about. Okay? Not only that, inflation. Things change. We can think about it, the same price today. As I gave an example to say, the same phone that you are having, even yourself, Sam, 2 years ago was not the same price. Today, it has that price that you bought. So it's the same, even the what? Even the timelines that we're reporting. We're supposed to report within the same period of time. Is it clear now, Sam?
Yeah.
Good. Good. You should be in class. Don't go out. You know, according to, you don't know, I don't understand God anyway. Let me say reality of life. I don't understand Him. Somebody can be here but is not here. You get the point?
Yeah.
Somebody can be in class and it is not in class. In some way, I don't know how God made us. So that's why I'm saying please be in here so that we should really understand of what it is. So I will write an example of presentation of, we did already? Okay, an example of presentation of financial statement in connection with financial position. Okay, so I'm going to give you an example on that one. Maybe some can understand it best. And this is again the format of the financial statement, and not only that, in our course outline, there's geography of financial statement. Okay? Geography. So it's the same, because when we don't go into the geography itself as a topic, you're going to say, but Mama has not told us about that. It's the same as we're going to set the example. So the example is based on the International Accounting Standard number 1 that we are going to do. Presentation of financial statements. We have an example. It's very long, maybe I should take it out. All this, sorry. Why? Because I just want, it's a bit long. So, example. Example on presentation collection of financial statements. We have company, a group company of XYZ. XYZ as a group company. Okay. As a group company, statement of financial position as at 31st December. Statement of financial position as at 31st December. So here you put whatever, but here we are not given here. Why? It's just an example to us that this is a presentation of financial statement. But because we are talking of financial statement and collection of financial position, we are going to write 2 years. Okay? 2 years, where we are going to write. Maybe, don't you have phones that you can just open the book page? The book page? Do you have a phone? Page 7. I think that's the best because we can all of us sit together rather than writing. Page 38. 38. 38. You are there, son? No, you are just scrolling. Good. Yes, please. Come again? I won't only want English because.
Okay. You have to send me the notes. The WhatsApp that I was using, the one that you guys use, so you have to send me the WhatsApp.
Mona, did I send notes for us presentation on that? No.
The book.
The book?
Yeah.
It's on the group.
Yeah, that's what I'm saying. I'm using another WhatsApp. The WhatsApp that I was using, they banned me.
Okay, then Dorothy, can you add him up? Is going to be, you're just going to be here. You're going to take the book now. We are on page 38.
Oh, the same book?
But just add him on the forum so that you should resend
You
the
have
book.
changed the number?
In the WhatsApp. So, all the information.
You know what? Because whenever in your phone there's a new WhatsApp, you are there. No, I don't.
And now I'm using the normal.
No,
I was using GP.
I don't know.
Okay. You don't know if it's going to download my status.
But as I get you.
So we are on page 38 of accounts book, F7 financial reporting. Financial reporting.
You got it? So, you got it? Are you not on the group?
I'm on the book. Just send me my hand.
Can you say hi again?
So we want to add some to the forum so that we can also have a look. So for those online, please go to the book that is on the forum, the ACA F7, page 38. That's where our example will be on the presentation of financial statements, page 38.
Somebody put it.
Yeah.
So page 38. Wanna reason? So we're going to be there, all of us. All of us should be there. We are there. Okay. XYZ group of companies that is presenting the financial statement of the financial position as at 31st December. You can say whichever December, that's 007 and 006, is it? So as the reporters, mainly when we are doing the analysis, because here they're talking about position. Okay, it means you can't talk about financial position in 1 year. It has to be compared. Even yourself, you can't say I'm in another class and yet you have not gone this other first class. So this is exactly the same. You compare. You say in second year or third year, this is what it was happening, and this is fourth year because you compare about 2 years. So this is exactly the same with companies. They compare the years. So XYZ group of companies, and then we go to assets that are there. That's the first presentation that the XYZ is presenting. Its financial manager or the financial reporter is doing that. Assets, then they're saying non-current assets. The other name of non-current assets? Sam? The other name of non-current assets? Fixed assets. Fixed assets is the name of non-current assets. Then we're there. Now starts to present.
What page? Today.
38.
Today.
The example that we have 2.1. Have you seen?
Yeah.
Good. So we're saying this man, this young man like Sam, is presenting XYZ group of companies. Therefore, we are saying that he is saying assets. That's the first presentation he's doing. Here we have non-current asset that you have answered. That is the other name is fixed. We have property, plant and equipment. Then we have goodwill. Is it understandable goodwill being a fixed asset? Maybe what is goodwill? Goodwill. Some goodwill. Goodwill, Mona. Maybe you can tell us about goodwill. Goodwill. Don't know. Goodwill.
I don't know.
You'd expect that from you. Mona, goodwill.
Reputation.
Come
I
again.
don't know.
The reputation. Great. That's it. Reputation. Okay? Goodwill is reputation. Look at it. It's a fixed asset. Okay? Because this you have ever heard that sometimes, hey, they had a shop or they had a company where they are going to start a company. You also pay for that because it's a fixed asset. The reputation, you have accepted go there maybe because of the reputation.
But how do they value it? how do they put it in monetary?
Yeah, it is managerial, whereby they sit down to say what is the value that we're going to give our reputation or our goodwill. Mm.
And now, how does it reduce in value?
No, it's not every property that reduces that decreases in value. So others appreciate in value.
Sure, but for example, here
Yes,
it has shown that it has reduced in value.
it has reduced in value.
Mm.
Okay. It means there should be a reason. Sometimes these managerials have said they sit down and because of what maybe Mr. Banner did, we have lost a bit of our what? Reputation. Therefore, we should evaluate at this. There are other cases that destroy the value or the reputation of the company. You know that? For example, can you give us an example of this destroying the goodwill of the come again?
Deloitte.
Yes, can you explain?
These are auditors.
Yes, they are auditors.
I think one of the years
Yes.
they kind of compromised their independence.
Sure.
So because of that, I think they lost the
Their
goodwill
goodwill.
because I don't think they are still operating
As they used
as
to.
that name.
Uh-huh.
Maybe it was sold to another name.
You know what? Goodwill, as she has said, is reputation. Okay? There are other things that destroy the goodwill of somebody. Come again? Yes, corruption.
Because this one is also, it was corruption. For example, they were sent to audit, I think, in another country.
Yes.
So they were corrupted not to touch some areas,
Oh, sure.
and they produced a report that
The government was doing very well.
yeah, for example, like that. Only to realize that that's not the state
Sure.
affairs.
Sure.
So because of that, it's when we lost.
Yes. You know what?
Like, was it Mabeto?
Mabeto.
I don't know. It was tax related stuff. Like they were put for tax avoidance. I think they were not paying tax. So I think from that time I haven't paid this like
No.
the way it used to.
Yeah, Mabeto was very popular then, but I don't know how it has ended. Maybe that. You know, there are some simple things that make us lose our dignity. You know, it's the same with organizations. Sometimes somebody can be big, but what he does is contrary to what the regulations are. There, it means the reputation has been distorted. So goodwill can really be devalued based on what has happened. Corruption is one thing that, as you said, is something that can really make the goodwill change that. So these are some of, we have seen so many companies that they were very popular then, but now they're not. These are some of the things that we have to think about. Maybe if you check and find out, we are going to see that they did something bad, that people say that you cannot do that. Okay? So these are some of the things. Then other intangible assets. Other intangible assets. But they are on fixed assets. Other intangible assets.
Like copyrights.
Yes, copyrights, patents, exactly. Those are also some of the assets that are very important. Investments.
It's on intangible assets. Huh?
Yes.
This book,
Yes.
is accounting. The way they wrote their financial position, they started with intangible assets on its own. So, like copyright patents and goodwill, non-current assets.
Yes.
It's fine.
Okay, they started with the goodwill and intangible. Then later on, fixed assets.
Yeah.
That's why I said that the presentation of financial statement will base on company to company. But the one that we are learning is the standard one. But when you can go to the, let's say, organization, they're going to tell you that please don't start the fixed asset, start with the intangible ones that will be. Then later, fixed asset, then later, the current assets. So it will depend on the company to company. Okay?
Okay.
Yes.
As long as it produces the same like information.
Exactly, exactly. In fact, the thing is that despite this start, it doesn't change anything. It will be the same. Mind you, if we're talking of assets, later on they are added together. Yes, they're added together. Yes. So we are having again investments in associates. Also, we have available for sale financial assets. Financial assets available for sale. What this can be? Financial assets that can be available for sale. Examples?
That are very close.
Mhm.
Maybe machines. With
Financial assets.
available for sale financial.
Financial assets. Oh, this subject you have not learned. That's why I was thinking to say, okay, I think these people, okay, this you're going to learn.
Just joined GMG after a long time.
Okay.
We are counting.
Okay, but you are going to learn in the asset financing, asset financial management. Okay. So, available for sale financial assets. Financial assets, we can, let's say, give in to say that somebody can be a professional in your company. There are other companies that maybe they use people, professional people to go and work. Because when we're talking about the services and the goods, we are thinking about people going to work, professionals, maybe engineer. Okay? You're a company that has an engineer. And then this engineer is doing maybe something in other companies. Maybe he's going to, let's say, fix or plant a certain machine somewhere. So the money doesn't go to an individual, it goes to the company. You get, despite it's a person doing the thing, but it's an asset. Later on,
It's a financial asset.
a financial assets. Okay. So there are so many you can go and read because just for your knowledge to know that financial assets. Then
Consultants, financial assets.
yes, yes, we can call them like that. Good. How about current assets? Then current assets, we have that inventories. Inventories. Maybe what are current assets? Current assets.
Current asset. Resources that the companies have for you to be sold so that you can obtain them through cash.
Okay, cash, current assets, or anything easily transferred or when sold easily can be cash. So we're talking about inventories, we're talking about trade receivables, other current assets, also cash and cash equivalents. So these are some of the assets that we were having. Then we have the total assets. The total assets. If you see on current asset and only an current asset, we are seeing that it is on non-current asset, it is 2007, it is 901, while on, I've now used it to the nearest, but 902 for you to understand laudable figures, and then 945 for 2006. So if you add that with the total of current assets, which is 564,884, makes up to 1,466,500. Okay? So we're saying total assets is that. Are we following? Sam, are you with us? Good. So then we go to equity and liabilities. I remember the other time when I think it was the weekend class, they were saying no, liabilities cannot be together with the equity. How can you explain to us liabilities being together with equity?
What?
Liabilities and equity being together. Can you explain to us, sir? Liabilities? Why be together with
Okay, which I don't understand.
Yes.
Why, yeah, like, but I think I understand.
Yes, explain.
Okay, I don't know how to explain it. Okay, equity, like, okay, the one I know you put equity on capital
Yes.
and liability on its own.
Okay.
But here, I think I understand here too because
Yes.
at the end you add capital and liability.
Yes. Yes. We both contribute to the running of the organization. We use capital as maybe funds contributed by maybe shareholders, and then you also use borrowers. So together we use them to maybe to run the organization. Some good. Some.
The same is saying that equity, especially liability, use like partners
Yes.
to run.
Yes.
Okay, like there are just like she said, there are also sort of funds, but in other branches they put capital on its own liability, short-term liabilities and long-term liabilities. So but it gave the same answer because at the end you add all of them together. Yeah.
And
So
they-
maybe they were just confused, maybe because they know that one they carry.
Madam, I think there's a digital formula which says equity. I don't know if equity is equal to liability, capital is equal to equity plus liability. Is it like that?
Yeah.
Yes.
Capital.
Yes.
Assets, yeah, assets, yeah, assets.
So what are we saying? We are saying that liabilities are loans that we borrow, maybe to add on our capital. Okay. It can be either cash or it cannot be a loan, a big loan. Okay. Maybe in millions or in billions, which can be maybe repaid 10 years to come. And it's going to add on our equity or on our capital. Okay? So this is why we are putting them together. And I remember there was a very big argument to say, where are we going to put it? In which presentation of financial statement are we going to put? And where should I ask you maybe here? We have a loan. We have taken a loan. How much? Maybe a big loan. Think about that. A big loan. Think about any big loan that we have.
7 million.
Come again?
7 million.
No, it's very. We are a big company. Come again?
200 million.
200 million. Don't talk of short-term loans that you can pay within 5 years. 200 million who have borrowed or who have taken us as our company, as a company. So we are saying 200 million is the one that we have borrowed. We are going to add on what? On the equity. But we are supposed to repay it, isn't it? Yes, we're supposed to repay. This is a loan taken from a bank. And the bank has given us capital plus interest to be paid, is it?
Yes.
So how are we going to divide this? This is the money, and that is the capital and the interest. How are we going to put them in the financial statement? How are we going to put? This is just a general comment or general understanding about how what is happening. We are saying a liability is an equity. Okay? And if we see there, it's in the balance sheet, isn't it? Yes. So how is it? How is it going to be? Or this 200,000 can be, let's say, we're building roads, and this can be maybe a tractor. Okay? It can be a tractor. We have borrowed or we have purchased with the bank loan and we have bought a tractor. So this amount, there is depreciation, is it? Is it? Depreciation is there. Available. But you are supposed to pay to the bank again. How are you going to distribute the figures in the financial statements?
Depreciation is an expense.
What?
Depreciation is an expense.
This one, an expense. So it goes to
Income statement. Profit and loss.
the figure that has the, let's say we are doing 20%, which means 180 million. Where are you going to put this? How about this? Where are you going to put this? It's going to be the balance sheet, isn't it?
On long-term borrowing.
Mm-hmm. Okay. How about the capital and interest? Capital and interest.
Capital.
Kama mzee wote ndio yata. Go and take on bench. So, it means these other expenses are going to go to the income statement, is it? This other to be, that 180 to be balanced.
I want to add anything to the balance sheet. Interest.
Interest, where should it go? Yourself? You do it.
Interest paid, is it expenses?
Interest, it goes to income statement again.
Yes.
On like other income. So
Good. Exactly. So, these are some of the things that we just have to learn. Go and continue looking into how the format is and how we present, so that we should know how we present. And I think you can also practice on the analysis that we did already. To say, let's say, just pick one of, you want to find out about, let's say, the financial position of the company, or finding the performance, that again has to be done. So this is what it means when we're talking about where's Benji?
I think I missed the line of this one time.
Okay.
Okay.
So this is room 4. This is the financial reporting. We're not going to break, we're going to write the same as 1, 2, 3.
You're doing the wrong. Oh,
Yes,
but
because
on our signing sheet, I've written 4.
that's fine. That's fine. You can write, you sign there, but then sign again there. So Mona, I think you just have to go and stop that, because we have finished the class. We started 12 o'clock. After 2, then we should end up our class in the